Hello, this is Jordan. This video is being recorded on the evening of Thursday, January 19th, 2023. Thank you so much for joining me. And in this video, I'm going to talk about sentiment and specifically something that's really interesting because we know that when sentiment gets too bullish, a market can correct, or if the fundamentals are really deteriorating and sentiment gets a little bullish, that can be a bad thing. So sentiment has to be evaluated with all the other parameters. But when you are coming, or when a market is coming off of a major low, it's coming after a really, not just like a correction for a couple months, but when it's coming off of a cyclical bear market, basically, and when the market rebounds, it's actually a good thing when sentiment gets overly bullish. And so I'm going to show you some examples of that. Not too many examples, but just using sentimenttrader.com's optics indicator. And I just want to keep this simple. And, of course I'm going to show gold, but, I also wanted to show the stock market. And so here we have the stock market, the SPY ETF at the top, the bottom in blue, that's their optics sentiment indicator. And so the boxes highlight what I am talking about. And so this is something I remember. I remember, learning about this. I don't want to say in 2003 or 2004, but I remember realizing this, years ago, but years after that 0203 bottom in the stock market, because it was really interesting. I don't know if people remember, but after 2002, late 2002, the stock market bottomed, had a pretty good rally into 2003 and through 2003, I should say. And sentiment was really bullish. The market was really overbought. And then it didn't really correct much after that. It went sideways before it went a little bit higher. And of course, from 04 to 07, the market really, it went up a little bit, but it really didn't do that great. But there weren't any sharp pullbacks, so there wasn't any retest of the low. And so you can see there with the first box, the optics in blue, that doesn't quite stand out as much as the others, but you can see that it was fairly high coming, almost immediately after that bottom in late 2002. And moving forward, another great example, look at some of the most bullish sentiment for optics, going back the last 20 plus years. You can see if we're running a moving average, sentiment probably got the most bullish right after the 2009 bottom. That was a huge rebound. And you can see in blue, look at you don't just have one bar. You have multiple bars that are really quite high. That's some of the most bullish sentiment based on this indicator in the last 20 plus years. And that's coming immediately after a terrible bear market, a terrible recession. And so early 2009, middle of 2009, summer of 2009, the proverbial thinking might have been, wow, we've had this great move. Sentiment it's just way too bullish. This market has to really correct significantly. And so it didn't really happen. It did. I think it had a little bit of a correction in 2010, but there was no retest or anything like that. Another example, 2001, that wasn't coming off a major bottom, but, the stock market corrected 20% and coming off of that bottom, sentiment got pretty bullish. But those first two rectangles are really the best examples. You can see coming off of the COVID crash low, sentiment, it got similarly bullish to 2009. I would say that's the second most historically based on this indicator was coming after the COVID crash. Look at how bullish sentiment got. And, the market kept running after that. Now, if you go to the end of the chart, I can see that sentiment, recently coming off this low has been pretty bullish, but this is only one indicator. So I don't want to, I hope I'm not sounding like I'm glossing over the sentiment indicator, but that, potentially that could, there could be another box there. But really the big focus is coming after a real bear market. And if you look at the two real bear markets that we had, look at 2003, look at 2009 in those boxes, and then also the COVID crash. I mean, that was obviously, I think, top to bottom, over 30%. So you can see those three bear markets or those two bear markets in the one crash. After the market bottom, look at how bullish sentiment got immediately after that. And so, we're going to show the same thing with gold here. And the reason why that is because when you have you have a crash, or, more importantly, you have a cyclical bear market that lasts more than a year, a lot of, the bulls really get washed out of that market. And it just takes a really long time for everybody to come back and everybody to get really bullish again. And, at the same time, it takes a really long, people come back into a market, it's rebounding, it's making really good gains, but it takes a really long time for the majority to come back, get into that market and get invested. And that's why, and that's why markets don't really decline, or they're not affected by these sentiment indicators looking really bullish immediately after a rebound following a cyclical bear market. And so here's the gold optics. And, I drew circles here. I should have done rectangles because those are much better. But look, we can start off before, 2001 and then early 2002. I drew two circles there. Look, that was immediately after gold's rebound, and sentiment, I'm not showing it in the mid 90s, but, based on this indicator, those two circles at the beginning, that's some of the most bullish sentiment in, years and years. And again, that was following an epic historical low. Another example of that, gold didn't have, the corrections were not, you didn't really have multi-year corrections. Gold acts a bit differently, but, another point is, and this is true with gold. This is a little different. And you also see this with the COT with gold. When gold is breaking out and sentiment is really bullish when it breaks out, that's not going to be a negative thing. And so the examples of that are, look at the circles that I drew here. Look at the one in late 2007 with that breakout. So after gold had that breakout, sentiment it was really over bullish, but that was early in the breakout. The market kept running. And so similarly, you see the same thing late 2009 when, just right as gold was breaking out past 1,000, sentiment was super bullish. So, and in addition to that, if we're looking at the last 6 years since 2016, when a market is not going to break out, it's kind of obvious when a market is not going to break out, sentiment doesn't get overly bullish. And so you can see that in 2017, early 2018, gold rallied back to that 1375 resistance, but sentiment was still really weak. Sentiment was just, it wasn't able to reach a high level. Whereas, and this is also important, look at what happened in 2019 with that breakout. Sentiment got extremely bullish as the market was breaking out past that base, and it kept running and running. And so, now what we're seeing, I should say, is gold sentiment, the bullish sentiment here, still has a ways to go. And, looking at gold specifically, the takeaway here is that sentiment it's likely to be really bullish when gold is going to break out, because that's what happened at all the other points. And so if gold is able to continue to rally, whether it's, in the next couple of weeks, or whether it takes 2, 3, 4, 5 months, whatever, if gold's able to rally and it rallies back to, 2050 or 2070, then it pulls back a little bit from there and it makes a move towards a breakout. These sentiment indicators are, they're not going to be subdued anymore. They're probably going to shoot up and become really bullish really quickly. But we're not at that point yet, as you can see with the box there. There's still a lot of room for sentiment to move up and become a lot more bullish. And so that's why I would say, at this point, don't worry about sentiment. Focus a lot more on the price action. And we know that, gold is coming out of a cyclical bear market. And so sentiment, when it gets overly bullish, that's not necessarily a bad thing, because and that's going to happen after gold rallies up and does its first test of the all-time high. And so that would be a good sign if sentiment gets overly bullish, because it's showing strength. This is a real bull market rebound. This is a real bull market. And then the second thing is that this bullish sentiment is not going to prevent gold from breaking out, as we've seen historically. So that was a lot to take in. I hope it was clear for you. I mean, I talked for way too long in this video, but that's basically the gist of it. Sentiment, when you're with respect to gold and having a chance to break out, bullish sentiment is not going to deter that. And at the same time, when you're coming out of a cyclical bear market, a multi-year decline, and sentiment gets really bullish, that's not a bad sign. That happens. The market is not going to correct that much. That's all for this video. Let me know what you think in the comments. Appreciate you following and listening, and I'll talk to you guys again in the next video.